Most traders believe they lose money because they guess the wrong direction, but direction is rarely the real problem. The real problem is price. More specifically, the price where traders choose to enter. Many traders do not lose because the chart fooled them. They lose because they enter a trade at the worst possible time. You have probably experienced this yourself. A stock looks strong. The chart looks perfect. The candles are moving higher and it feels like the move will continue. Everything on the chart suggests the move is just getting started, so you buy. And almost immediately the price drops. It can feel as if the market is working against you, but the market is not attacking you. Markets simply move the way markets move. What usually happened is much simpler. The trade was entered far above the price area where the market had been trading most of the day. When traders do this, they often lose control over the trade. Chart whisperers follow a simple rule. Do not chase after price. Let the market come back to you. Understanding this rule is one of the biggest steps a trader can take toward better decisions. Chart whisperers understand something many traders miss. Price does not move randomly. Most of the time, price moves around areas where the market trades frequently. These areas act like a center of activity during the day. When price moves too far away from that center, it often pulls back toward it. One of the most useful tools for seeing this during the trading day is called VWAP. VWAP stands for Volume Weighted Average Price. On the chart, VWAP appears as a line running across the screen. This line shows the average price a stock has traded at during the day, while also taking trading volume into account. Because VWAP includes both price and volume, it helps show where most of the day's trading activity has taken place. It gives traders a reference point for where the market's average value currently sits. Many charting platforms, including TradingView, also offer a version called Triple Band VWAP. This version keeps the main VWAP line in the center, but adds bands above and below it. These bands act like distance markers. They help traders see how far price has moved away from the day's average value. When price stays near the center VWAP line, the stock is trading close to its daily average. When price moves toward the outer bands, it means price has traveled farther away from that average. These bands help traders quickly see whether price is near balance or stretched away from it. To visualize this, imagine the chart as a center line with price breathing around it. Price moves away from the center. Then it pulls back toward balance. Then it moves away again. This rhythm happens again and again throughout the trading day. Many professional traders pay attention to VWAP because it shows where the market has spent most of its time trading. Knowing where price sits relative to that average helps keep the chart in context. Chart whisperers follow a simple principle. Do not chase price far from VWAP. Let the market come back to you. VWAP helps make that possible. But VWAP is not a signal. It is not a buy button. VWAP is simply a reference point that helps traders understand where price is trading relative to the day's average value. When price is above VWAP, the market is trading above its average price for the day. When price is below VWAP, the market is trading below that average. VWAP does not predict what the market will do next. It simply shows where price currently sits in relation to the day's average activity. Even traders who understand VWAP can still fall into the habit of chasing price. This usually happens when a stock begins moving quickly. The candles become larger, volume increases, momentum builds. Traders begin to feel the fear of missing out. They rush into the trade before the move leaves them behind. This is where many traders quietly make an expensive mistake. They end up buying far above VWAP. When price moves too far away from its average, the market often becomes unstable. Moves that stretch far from VWAP frequently pull back toward balance before continuing. This is why patience is so important. Patience is not weakness. Patience is being in control. Chart whisperers understand that strong trends often move in a rhythm similar to breathing. Price moves away from VWAP. Then it pulls back toward it. Then it continues moving again. Instead of chasing the first move, patient traders often wait for that pullback. VWAP becomes a tool that helps highlight areas where trades may offer better control. But mistakes can still happen. Some traders believe VWAP will always act like a wall. They expect price to bounce every time it touches the line. Markets do not work that way. Sometimes price reacts at VWAP, sometimes it moves straight through it, and sometimes VWAP becomes less important for a period of time. This is why chart whisperers never trade based on VWAP alone. We wait for confirmation. Confirmation means the market must show clear evidence before capital is committed. Chart whisperers look for three elements working together: structure, as shown by VWAP, participation, shown by volume, and momentum, shown by momentum indicators. When these three elements align, the chart has stronger supporting evidence. Without confirmation, VWAP is just a line. With confirmation, it becomes useful context. Another mistake traders make is trying to predict reversals too early. They see price above VWAP and assume the move must end soon. Or they see price below VWAP and rush to buy the bottom. Reversals can and do happen, but predicting them is difficult, even for experienced traders. Chart whisperers follow a simpler rule: always respect the direction the market is already moving. There is another situation where VWAP requires caution. This happens when VWAP becomes flat, and price moves back and forth across it. When VWAP is flat, the market may be undecided. Price crosses the line repeatedly without choosing a clear direction. The result is often messy price action. During these periods, the best trade you can make is often no trade at all. Waiting for the market to choose a direction protects both capital and confidence. The time of day also matters. The first hour or two after the market opens usually contains the strongest volume and momentum. During this time, VWAP reactions often carry more meaning. Later in the day, volume often slows and price movement can become less reliable. Understanding when the market is most active helps traders avoid forcing trades during weaker conditions. Even when a setup looks strong, capital exposure still matters. Some traders see VWAP working and take positions that are too large. When a trader does this, every small price movement begins to feel stressful and emotions begin to take control. Chart whisperers understand a simple truth: capital exposure controls psychology. Instead of entering with a full position, experienced traders often begin with a smaller position size. If the trade continues behaving properly, they can then increase their position size by gradually adding to it. If the trade does not behave as expected, the exposure remains manageable. Survival always comes first. VWAP trading can be summarized with a few simple ideas. Use VWAP to understand market context. Avoid chasing price too far away from it. Treat VWAP as an area of interest, not a guaranteed signal. Wait for confirmation from structure, participation, and momentum. Pay attention to time of day and market conditions. Control your capital exposure. VWAP is not designed to produce quick profits. Its purpose is much simpler and far more important. VWAP helps traders avoid common mistakes. It helps them avoid chasing price, entering trades at poor levels, and trading without structure. By keeping price in context, VWAP helps traders make more controlled decisions. Chart whisperers understand that success in trading does not come from excitement. It comes from patience, discipline, and control. The goal is not to predict the market. The market does not reward predictions. It rewards traders who can observe what is happening and respond with discipline. The real goal is to stay aligned with what the market is actually doing. When price shows strength, you participate. When structure weakens, you step aside. When conditions are unclear, you wait. We understand that success does not come from guessing the future. It comes from reading the present. And when you learn to trade what the market is actually doing rather than what you hope it will do, you stop chasing the market and start moving with it.